three key fundamental takeaways for this week. Guys, number one, let's start with today's incredible US jobs data. I've already done a blog on this, so if you want more detail, do check it out. But the data we got today, the NFP data, absolutely smashed expectations. 2.5 million jobs were added to the US economy in May against expectations for 8 million to be lost. So a beat on expectations of 10.5 million. Incredible scenes. And obviously after that data, we saw huge risk on in the market. And risk assets, to be honest, they've been risk on now pretty much non-stop for the last 2 weeks, but we just really finishing the week with some strong performance in stocks, in risk FX, in crude markets. Number two, the ECB. On Thursday, the ECB over-delivered on market expectations, really signaling to the market that they've continued from that Draghi message back in 2012 when he said we will do whatever it takes to save the Eurozone and to keep the Eurozone together. The ECB are still doing it, guys. 600 billion more on their PEP, Pandemic Emergency Purchase Program. The total size of that program, by the way, now 1.35 trillion. So it's a huge QE program, and it's being used to make sure that all of the European nations can borrow at, cheap interest rates, so that we don't have another debt crisis, which is a crucial part of this recovery. The fact that governments in the Eurozone are going to be able to borrow money cheaply. And it just adds to all this optimism that we're getting around the Eurozone at the moment, because we've got these proposals coming through for the recovery fund. It looks like we're moving towards a deal on that. Eurogroup finance ministers are meeting next Friday, by the way, so that's a heads up. But all of this optimism from the ECB and there's other things I was just saying, contributing to risk on, basically. Number three, the US-China trade deal is still on, guys. A lot of people had been thinking this time last week that we were getting all this rising tension between the US and China, specifically regarding Hong Kong, but also regarding China's treatment of the Uyghurs, and there's loads of other things they're bickering about as well. And people were fearing last week that it was getting to the point where the phase one trade deal would be under threat, but apparently not. US officials have indicated this week that they're happy with the trade deal. Chinese officials have, well, basically, I'll describe it in a different way. There were reports earlier on in the week that China had basically stopped fulfilling its side of the bargain in that phase one trade deal. Basically, reports saying that they had stopped buying soybeans, but China quickly came out to deny these reports, pretty much signaling that they are still all in on this trade deal. And really, this trade deal, as long as this trade deal stays alive, US-China tensions are seen as probably not able to get too out of hand like they have been in the past. So those are my three things to take note of this week, guys. I will see you in the next one.